Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In today's lesson, we're going to explore an expert advisor called roofing filter cycle reversion. This is a mean reversion strategy built around a clever signal processing tool borrowed from digital electronics, John Ehlers roofing filter. By the end of this video, you'll understand how the filter isolates the market's swing cycle, how the entry and exit rules work, and how the code brings it all to life. Let's get started. Remember, this is educational content only. So what exactly does this expert advisor do? At its heart, roofing filter cycle reversion is a counterswing, mean reversion system. Rather than chasing momentum, it waits for price to stretch away from its recent balance point, and then looks for the moment that stretch begins to unwind. The engine that makes this possible is the roofing filter, a two-stage bandpass filter that John Ehlers adapted from the field of signal processing. Here's the idea. Any price series is really three things layered together. There is the slow trend, which drifts along at very low frequency. There is the tradable swing cycle in the middle. And there is fast, jittery noise from spread and tick movement at the top. A traditional oscillator that fades extremes often gets overrun because the trend component leaks straight through it. The roofing filter solves this by removing both ends of the spectrum. A high-pass filter strips away the slow trend, and a super smoother strips away the fast noise. What remains is a clean wave that genuinely oscillates around zero. Because the amplitude of that wave changes with volatility, the strategy converts it into a z-score, measuring how many standard deviations the cycle sits from its own recent average. That gives us a stable, self-adjusting oscillator with symmetric bands above and below zero. This approach is designed for liquid, mean-reverting instruments on intraday timeframes. Think of major currency pairs like euros, or an instrument like gold, or a stock index, typically on the 15-minute through 1-hour charts. It is not hard-coded to any one time frame, so it runs on whatever the backtest selects. Who is it suited for, in an educational sense? It's for traders who are curious about cycle analysis and signal processing, and who prefer a patient, rules-based system that fades exhaustion rather than one that chases breakouts. As always, this is a study of mechanics, not a recommendation, and every trading approach carries the real possibility of loss. Let's walk through the mechanics step by step. On every newly closed bar, the EA advances its filter chain by one value. First comes the two-pole high-pass stage, whose cutoff is set by the HighPassPeriod, defaulting to 48 bars. Any swing slower than that cutoff is treated as trend and removed. The output then flows into the two-pole super smoother stage, governed by the SmoothPeriod, defaulting to 10 bars. Movement faster than that is treated as noise and removed. The result is the roofing output, a smooth cycle wave hovering near zero. Next, the strategy normalizes that wave. Over a rolling window set by the norm window parameter, defaulting to 50 bars, it calculates the mean and standard deviation of the roofing output, then expresses the latest value as a z-score. This tells us how far the cycle has stretched, measured in standard deviations, or sigma. Now the signal. The key parameter here is the threshold, defaulting to 1.0 sigma. The strategy does not buy simply because the cycle is deep in the lower band. Instead, it waits for a confirmed turn. For a long, the cycle must cross back up through the negative threshold. In other words, it was below -1 sigma and has now climbed back above it. And the just closed bar must be bullish, meaning it closed above its open. That combination signals a swing low that is beginning to recover. The short side is perfectly symmetric. The cycle must cross back down through the positive threshold, having been above +1 sigma, and the just closed bar must be bearish, closing below its open. That marks a swing high starting to roll over. Risk is handled with the average true range. The stop is placed a multiple of ATR beyond the entry, set by the ATR stop multiple, defaulting to 1.5. The take profit is a reward to risk multiple of that stop distance, set by reward risk, defaulting to 1.2. The EA holds only one position at a time per magic number, and a spread guard blocks new entries when the spread is wider than the max spread point setting. Once in a trade, the bracket manages every exit automatically, so the plan is set the moment the position opens. Let's look at the actual MetaQuotes language code the expert advisor runs. At the top, we have the input parameters, each one matching the strategy's design. HighPassPeriod and SmoothPeriod control the two filter stages. Norm window sets the length of the rolling z-score window. Threshold is the sigma band the cycle must exit. ATR period, ATR stop multiple, and reward risk define the risk bracket. Max spread points is the spread filter, and lots and magic set the volume and identifier. Now to the signal blocks. On the long side, the Boolean named cross-up is true when the previous cycle value was below the negative threshold and the current value has risen to or above it. If that cross-up happens and the signal bar is bullish, the code reads the ask price as the entry, sets the stop loss 1 stop distance below it, and sets the take profit 1 reward above. It then calls trade.buy with the lot size, symbol, and those stop and target levels attached. The short side mirrors this exactly. The Boolean cross down is true when the previous cycle value was above the positive threshold and the current value has fallen to or below it. If that cross down happens and the signal bar is bearish, the code reads the bid price as the entry, places the stop loss 1 stop distance above it, and the take profit 1 reward below. It then calls trade.sell with the same structure. Notice that both sides attach the stop and target at the moment of entry, and both use normalized double to round the levels to the symbol's precision. That's the compact, symmetric heart of the code. Now let's bring it all together on a chart. On screen you can see a price series in the upper panel, and beneath it the roofing filter cycle, drawn as a z-score oscillator. 2 dashed lines mark the sigma bands at +1 and -1, with a 0 line running through the middle. Remember, because the roofing filter has already removed the slow trend and the fast noise, every swing you see in that lower panel is meant to be a real cycle turning point, not a trend artifact. That's what makes fading these extremes reasonable. Watch how the strategy handles first a long trade, and then a short. We begin on the left with price drifting gently and the cycle oscillator resting near 0. On the second and third candles, price starts to slide lower, printing a run of bearish bars. As it does, the oscillator dives downward, pushing below the -1 sigma band into the lower, oversold region. By the fourth candle down, price has carved out a fresh low and the cycle is stretched deep beneath the band. This is exactly the condition the strategy watches for, not to buy blindly, but to wait for evidence the stretch is unwinding. That evidence arrives on the next candle. Price puts in a bullish bar, closing well above its open, and the cycle oscillator turns and crosses back up through the -1 sigma line. Both conditions are now satisfied, the cross up out of the lower band, and a bullish confirming bar. The EA opens a long position, and you can see the buy entry marker on the chart. At that same moment, the stop loss is placed a multiple of average true range below the entry, and the take profit is set at 1.2 times that risk distance above. From there, price recovers just as the cycle suggested it might. The following candles push higher, the oscillator climbs back toward 0, and price advances into the take profit target. You can see the take profit marker where the long trade closes for a completed reward to risk outcome. That's one full mean reversion cycle on the long side. Stretch, confirmation, recovery, and a planned exit. Now watch the mirror image unfold. Price keeps rising into the right half of the chart, printing strong bullish candles, and the oscillator climbs above the +1 sigma band into the upper, overbought region. Price stalls near a fresh high, and the cycle is now stretched well above the band. Again, the strategy does not sell simply because the cycle is high. It waits for the turn. The turn comes on the next candle, which closes bearish, below its open. As that happens, the oscillator rolls over and crosses back down through the +1 sigma line. The two short conditions align, the cross down out of the upper band, and a bearish confirming bar. The EA opens a short position at the sell entry marker. The stop loss is placed a multiple of ATR above the entry this time, and the take profit sits 1.2 times the risk below. Price then unwinds downward, exactly the behavior the strategy is designed to study. The final candles fall away, the oscillator sinks back toward 0, and price reaches the short take profit target, where the trade closes. You can see the second take profit marker there. Notice the rhythm across the whole sequence. In both trades, the strategy let price reach an extreme, waited for the cycle to actually turn and for a candle to confirm that turn, and only then entered, always with a predefined stop and target. That patience, waiting for the reentry rather than the naked touch, is the core idea. Of course, not every cycle resolves this cleanly. In live conditions, the cross can fail, price can keep running, and the stop loss is there precisely because losses are a normal part of any strategy. And that brings us to the end of our deep dive into the roofing filter cycle reversion expert advisor. Today we unpacked how John Ehlers' two-stage roofing filter isolates the market's swing cycle, how the Z-score turns that cycle into a stable oscillator, and how the strategy fades confirmed turns out of its sigma bands with a symmetric long and short design and an ATR-based bracket. I hope this gave you a clearer picture of how cycle-based mean reversion can be built in code. If you found it helpful, please give the video a like, leave a comment with your thoughts or questions, and subscribe for more MT5 strategy breakdowns. You can find more educational resources at www.algobot.live. Everything here is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.